Well, largely on the red side. Hang Seng is up, but it's absolutely flat. Net auto debt for the company has reduced almost 14,000 crores quarter on quarter.
In fact, I would say with good amount of confidence that the monetary policy is on the right track.
Headline inflation at least is below 5% for the first time in 17 months.
Tankers continue to be strong, and except for, the normal, and here there's seasonality kicking in.
We've opened in the green a tad bit, really. I mean, you'd have to say it's absolutely quiet at the moment.
I would say if you've made your money, great, take some profits off.
There is a significant softening of core goods price momentum.
After opening at levels of 18,340, the Nifty's added on close to about 50 points.
This is corroborated by the April WPI inflation print, which has come in at a negative 0.9%.
We've seen the stock price correct about 31%. This at a time when the mid-cap index was higher by 7% and the Nifty itself was up 5%.
Two main contenders, but naturally, the State Congress Chief, D.K. Shivkumar, the CLP leader, Siddharamaiah, and both of their supporters are almost out on the streets.
Other day's high, the Nifty is up 120 points.
All right, you're with us here on a fresh new edition of Closing Bell. That was a wrap out of the day so far. We are coming to you live from the CNBC-TV18 Motilal studios. And you got all three of us here in the studios. Nigel, hi. Reema,
Hi.
I mean, I'm just looking at the market slipping a little bit, guys.
Yeah.
And is it going to be a case of so close yet so far? Because we came within, decimal points close of the all-time high. Take a look at that. The Nifty bank high today is 44,151.70. And the all-time high is 0.80, 44,151.80. And then there is a bit of a slip which is emerging. We're at, at least the last 10 minutes low, 44,025 or so, last 15 minutes low maybe. There is a bit of a slip which is emerging very clearly. So this is interesting, right? The high was made at 224, and this has happened in the last 6 minutes or so of trade as we start this program. You can say that for all practical purposes, we made a new high. But I mean, can you? Will the newspapers carry Bank Nifty at a new high? No. I mean, a high will be made when a high is the previous high is taken out. In any case, I mean, it's a good-looking screen overall. The Nifty, just to move on from the Bank Nifty, is about 2% away, about 400, 450 points or so. It has, though, taken out the 18,450 level, which is the last retracement of the entire fall from the all-time high of 18,887. And I just want to leave you with some spectacular changes on, the Bank Nifty constituents, the ones which have done the best from the lows of March. The low in March was made on the 16th of that month. And what a run we've had. The changes are on your screen. AU Small Finance Bank, IDFC First, Bandhan Bank. Unlikely, some would say, right? I mean, it's not the SBI or the ICICI or the Kotak. I mean, they're there, but they're lower down. They're not right up there on top. IndusInd 20%, Kotak Bank 18%, ICICI Bank 15%, and the likes of Bank of Baroda, SBI, etc. are up about 10% or so from the lows of March. So that is the index which in all likelihood will make new highs. Of course, we're nitpicking. It has made new highs, perhaps you can say that. And the Nifty perhaps will follow. So next 1 hour, interesting trade setup really lined up. Reema, hi.
Hi, and it just goes to show that if you had bought any dip in the market, you would have made so much money. If you remember on Friday when HDFC Bank, HDFC Limited had fallen, the Nifty Bank had actually fallen nearly 1,100 points by the close of trade. So if you had bought that day, you would have made so much money just in this week itself, but getting tantalizingly close to that all-time high level. Just remember that tomorrow, HDFC Bank goes ex-dividend, by, I think, about 19 rupees. It goes ex-dividend tomorrow, so that could weigh on the Nifty Bank, and it has a weightage of about 32%. Today, you've got a lot of these global markets also being fairly supportive. So the CAC is up nearly 0.5%, the DAX FTSE higher by 2/3 of a percentage point. The Dow Futures is currently up nearly 150 odd points. It's all the domestic-facing sectors which are doing well. So the star today is the real estate index. The Nifty Realty Index itself is up close to about 4.5–5%, led by DLF, which is up about 8 to 9%. But even others like Oberoi Realty, which report numbers tomorrow, are holding up pretty smartly. You've got other sectors. FMCG is up 1 3/4%, 2/3 of a percentage point. The auto index has seen a gain of close to about 1%. So generally, all these domestic-facing sectors are doing well, and it's been a broad-based rally today.
Well, that's right. Rima, and I think this bit of a downtick that we're seeing on the Nifty Bank, that could be an algo trade that's playing out, right? You hit those highs, and then, in fact, there is some sell orders that come out there. But let's see how the last 55 minutes go. What is clear, though, is that this is a buy on dips market till maybe that 18,100 odd mark gets broken out. And just look at the options data. It's supporting this up move. 18,400 put. Pull up the intraday chart out there. Big open interest build up. Just take a look at that. In a single session, we have more than 70 lakh shares getting added there. 18,350 as well should come up for you. That as well has added more than 50 lakh shares. So the short point is between these two strikes itself. On the put side, you're seeing writing of more than 1 crore shares. Tomorrow is the Nifty Financial Services Index. That plays out the expiry. That index as well is holding up quite well. And that as well has moved higher. So the Nifty Bank, yes, that's up close to around 0.6%. But tomorrow we'll keep an eye out on the Nifty Financial Services Index, which as well has been holding its ground. Well, before we move on, let's tell you what we have lined up on the show for you. A whole host of stocks are buzzing today. Q4 numbers bolster Tata Motors. The stock is one of the top gainers on the Nifty after reporting strong earnings across businesses. Earnings fine print and brokerage commentary lined up on the show.
Weak Q4 numbers drags Avenue Supermarts. We'll focus on the stock, which is down nearly 30% in the last 22 months. We'll track market technicals with Mitesh Thakkar and Rahul Sharma of JM Financial Services. And finally, we'll discuss the way forward for the markets with Rajesh Kothari of Alf Accurate Advisors. All this and much more in the next 60 minutes.
Okay, 122 on the Nifty. Banks, of course, leading, and things are looking all in all pretty okay. Pretty good. Mitesh Thakkar is with us, and so is Rahul Sharma. Rahul, of course, is with JM Financial Services. Gentlemen, good to have both of you here. Appreciate your time. Mitesh, so have we made a new high or no? 10 paisa, right? 10 paisa difference.
Yeah, I mean, technically, if you want to argue about it. But what could be important, Prashant? The highest closing when you got that high was 44,049. And we are practically trading about that. So even if we don't get an intraday high, or just, even if it's by 10% it's missing, if you get a closing above the current levels, I would consider that as a new high. The other good thing is that the structure is positive. So if you don't count it today, it should happen in the next couple of days. So in that sense, stay positive, nothing to worry about. Typically, earlier highs do bring in a bout of profit booking. So I think unless until the close today's week, I would be upbeat that the markets will make a new high either tomorrow or maybe max day after tomorrow. But that's the Bank Nifty I'm talking about. So I think wait for the closing, we'll have the answer to that. But if not now, I think in the next few days, I do suspect that eventually the Bank Nifty would head towards newer highs. Having said that, on the stock side, I have two buy calls. Bata India is something, which is gaining strength. We had a call earlier on Thursday. I think today is showing some continuation. So that's a buy with a stop at 1524, targets of 1580 here. And Gas Authority or GAIL, disclaimer that we have some positive delta positions, which is a mix of futures and options positions. GAIL is breaking out above the earlier highs of 110. So buy here with a stop at 109.75 for targets of 116.
All right. Thanks a lot for that, Mitesh. Well, let's get in Rahul Sharma as well into this discussion. Hi, Rahul. Thanks so much for joining in. Well, I think, a few months ago when the FIs were going net short, I think you had made this point on Twitter, if I'm not mistaken. Don't just track the FIIs, but also track the retail and the domestic HNI names and others and how they are positioning. It seems they were the smarter ones in this pullback. The question, though, is from around this 18,400, what do you do? Does the Nifty have more firepower with it? Or do you think we're reaching those resistance zones and we could see a bit of a cool down or pullback from here?
Yeah, very good afternoon, Nigel. So every time FIs have bought like more than 5,000 crores in a month in the cash segment, Nifty has more often than not been a trending, it has been a trending month for Nifty. I think this time around also it is not so different. All-time high, I think, may happen in a few days' time for the Nifty. Bank Nifty is almost happened. My sense is this leg, as we discussed in the previous month's meet as well, that this move has got longer legs. And the market breadth and thrust indicators are clearly indicating that the quality of this up move is much better than the last time when the Nifty was at 18,800 odd when we had clocked the previous all-time high. So I think it's clearly a buy on dip market. Secondly, the relative outperformance, the underperformance that we had to the US markets is now reversed. And I think in the next couple of months at least, we should be clearly outperforming the US markets, which is where we're expecting the Nifty to test somewhere around 19,000 in the month of May itself, and much more in the coming months ahead. So I think both Nifty and Bank Nifty are poised pretty strongly. It has been a rally led by banking and financials. We saw the Fin Nifty adding around 89% long open interest in the previous week. Even today, it just continues to add long open interest. So I think there is more upside to it. This is just the beginning, especially on the banking and financial side. And every dip, I think, should be a good buying opportunity for another 4 to 5% up move from these levels.
So 19,000 on the Nifty, Rahul, in the month of May. On Nifty Bank, what's the target price?
Yeah, so I would rather be more specific into what looks more attractive in the banking space. So PSU banks have not participated in this rally, the last leg of the move that we are seeing. I think in PSU bank, the risk reward is pretty attractive at these levels. PSU bank index still has not come closer to its all-time high. So my sense is private banks have done their bit. They made cool off for a bit. PSU banks to come in from that space. I think our top picks are Bank of Baroda and State Bank of India. I think these are the two banks which are poised pretty well for a rally from here. So I think in Bank Nifty you have to be slightly specific because of the risk reward, which is not so favorable in private bank. But I think PSU banks are the ones to go for.
Okay, Rahul, just one before we take just a quick question. We're not finishing some pattern here at all-time highs, right? Or it's possible.
Yeah, so ideally I would say the Nifty is not done yet. Now
I'm sorry, I'm talking about the Bank Nifty. Sorry, Rahul, I should have specified Bank Nifty.
Yeah, so Bank Nifty, my sense is, if you've had long positions, if you've enjoyed this rally, I think it's a good time to book profits, maybe shift from private to PSU. I think that should be the strategy going into Bank Nifty from here. If you're an investor, I think it is best to stay put. I think there is more upside on the cards in the coming 3 to 4 months. So I think if you're a trader, the best thing to do is, take some profits off the table and move on to some of the, underperforming names in the Bank Nifty space.
Okay, all right. Rahul, we'll leave it there. Thank you very much for joining us. Good speaking with you here on CNBC-TV18. Thank you. Now, real estate stocks are buzzing, and DLF, of course, is the big one, which is leading with gains of 8%. Sonal is here with details of what's going on, DLF and other names as well. Sonal.
Thank you so much for that. Well, 5% higher on Nifty Realty Index, and there's a lot of buoyancy post DLF's numbers as well. Most of the companies, I was just taking a stock, have reported record high quarterly and yearly sales in the quarter gone by. So FY23 has been really strong across the listed space. Let me start with DLF because that's the most recent one. And as I said, it was record quarterly and annual bookings for them. For FY23, DLF's bookings were 15,058 crore rupees, which has almost doubled on a YOY basis. And even the quarterly run rate, if we see, it came in at 8,500 crore rupees, which compares with quarterly run rate of 2,500 to 2,700 crore rupees for the company. So there's been a big jump, and it is led by newer luxury projects for the company. Similar has been the story for Godrej Properties as well. They reported highest ever quarterly and annual bookings. Their FY23 bookings were up 56% to come in at 12,232 crore rupees. They beat their annual guidance by 22% in FY23. The quarter 4 earnings also, or bookings also, up 25% on a YOY basis. For Prestige Estates, the story is same again. They reported record high sales in FY23 and quarter 4. Their total sales in FY23 were at 12,931 crore rupees, one of the highest in the listed real estate space, and quarter 4 sales were up 19% on a YOY basis. For Macrotech, yes, it was not a record high sale, but the numbers were decent for the company. Their pre-sales for FY23 were up 34%. Company crossed their FY23 pre-sales guidance of 11,500 crore rupees, so they did do well in FY23. However, in quarter 4, they did see some decline, 12% on a YOY basis because of a higher base. Sobha again recorded best ever quarterly sales in Q4. Their Q4 sales value came in at 1,207 crore rupees, which was up 26% on a YOY basis. Similar was the story for Kolte Patil as well. Their value in the quarter gone by was up 41%. They also reported highest ever annual sales volumes of 3.27 million square feet, which is a growth of 21%. So across the listed space, they've done well, and that is something which is giving a lot of confidence to investors as well.
Thank you very much, Sonal, for that. Let's invite Deepak Shenoy, the founder of Capital Minds, on the show now. Deepak, the real estate sector is clearly in an upcycle, which is continuing. But particularly for DLF, the numbers are staggering in terms of bookings. From an average booking of 2,500, 3,000 on a quarterly basis, this quarter the bookings have hit 8,500 crore rupees. What explains that? Is it just the change in the taxation about the new cap on capital gains deduction at 10 crore, which come into effect from 1st of April? Is that something which buoyed it? Or do you think we are seeing a step up in the quarterly run rate of real estate companies now?
Well, I mean, Rima, actually, I don't know whether the tax changes impacted it. It would have been useful for ready properties, but for under construction properties, I don't know if the tax, the situation will apply immediately. Though, you would have to have sold a property very recently, and then this new tax would have applied. If you had sold a property recently and then booked it, before March. But I think there's genuine demand across the landscape. Delhi is Gurgaon is actually, the micro market is a lot more investor-led. So, and a lot of times the numbers that come in the beginning at booking stages, pre-launch kind of booking numbers, they're usually not very reliable. In the longer term, when actual end users come in, which is usually maybe 1 or 2 sales down the line, that's when you see the reliability of the numbers. In the last cycle, we've seen a lot of drop-offs, but I'm hoping that doesn't happen right now. There seems to be a lot of genuine demand, but primarily because I think during COVID, the supply dropped quite precipitously, and now that the supply is weak. There's not been so much supply. Whenever there's a new supply out there, the demand is kind of flooding to take its place. I think this is across India. So I think this may be an interesting time for real estate to turn. However, my word of caution is property prices can go up, bookings can go up, but real estate companies end up usually not making money because they take all the profits and then go and plow them into buying dead assets like land, really, really far away, and provide a very low return on equity as a shareholder. So, the real estate boom may not translate into a shareholder boom. Just my 2 cents.
Okay, all right. Hi, Deepak. Good afternoon. Deepak, I wanted to ask you about, the Karnataka election results have come out. And now some expect that maybe at the center, there will be more amount to spend or maybe some populist measures as well. In turn, staples could be a beneficiary. Do you agree? Would you look to play that space?
So, yes, I mean, one of the worries right now is, are we going to get another farm loan waiver? Are we going to get the center talking about some of these items which will, reduce the spend on what should really benefit India in the longer term, and instead offer free rice or whatever. I mean, there's so much free food flying around from COVID. You had one level of a free program, and then the cheap grains program already provided as the food security. So I don't know how much more you can provide, but I'm sure the politicians are smarter and they'll have more schemes up their sleeve. But that is a worry. I hope this is not a blueprint that is played across. I don't think the country's finances are in such a shape that you can actually go populist without hurting a lot of the recovery work that's still happening from COVID. Our fiscal deficit is still quite high. So I would say, it's a worry, but I think at this point, I don't want to take a bet just on what might come. Let it come and then we'll analyze it. Based on that, not buying like into staples companies just because there might be some kind of a free money program coming up.
I think Deepak, hi, afternoon, you were saying on Twitter that the immediate downside is that all the election-related road repair work comes to a halt, right? So maybe I hope we don't have to wait for the next election cycle for that to pick up. I'm not sure how the state of road. Go on.
I hope. Yeah, sorry. I hope that doesn't happen. We have, like in Mumbai, we all cry about our roads in Bangalore. Though it doesn't seem to be a statewide problem. It's only like parts of Bangalore which complain over it. So.
Yeah. No, it's everywhere here in Mumbai, I can tell you that. But there are a lot of infrastructure projects going on. So hopefully, as the government has been saying, in a year, 2 years' time, things will look much better, hopefully. All right, now, Tata Motors is the other one, which, Deepak, you might want to listen into as well. It's one of the top Nifty gainers. It reported strong earnings across businesses. Brokerages are bullish. Sonia is here to just wrap things up for us on Tata Motors. Sonia.
Well, thanks a lot for that. It's not only the top Nifty gainer today, it's the top Nifty gainer this year. It's up 37% and is at a fresh 52-week high. The stock is now just 15% away from the all-time high that it hit way back in 2015, which was about 600 rupees or so. And there are several reasons why the stock is doing very well. One, of course, JLR business has picked up pace. In the quarter gone by, the business was very strong. The EBITDA itself went up 200 basis points year on year. The India business has also been picking up. The CV business, the commercial vehicle segment, has seen its EBITDA margins hit a 17-quarter high of 10.2%. But more importantly, the deleveraging of the balance sheet is something the street has taken with both hands. The net auto debt has reduced 13,800 crores quarter on quarter. And now the India debt is at a 15-year low for Tata Motors. And that's why you're seeing this big reaction on the stock. Now, there is a guidance that Jaguar Land Rover has put out to deliver £2 billion of free cash flow in FY24. And the street is very confident that they will be able to achieve that. If you look at almost all brokerages are quite bullish on the stock. There is a target price of anywhere between 600 to even 665. Jefferies has a target price raised to 665. And, most believe that the company will be able to achieve its deleveraging targets as well as its EBIT margin target of over 6% by FY24. Back to you.
Okay, thanks very much, Sonia. Interesting. Tata Motors there starting to fire higher a little bit. Deepak, Tata Motors, if you have a view, but I want to understand from you what you are doing for your clients in terms of any changes you've made, anything new you've bought or sold.
Oh, yeah, we've actually not too many changes this time, Prashant. I think a lot of the stocks we own have announced fairly good results. A lot of stocks still have to announce, so we're going to wait before we do any major rebalancing. But we do find, so for instance, Tata Motors results have been encouraging. From the India perspective, I like India Auto a lot more than I like JLR at this point. Though JLR has sprung the surprise for the Tata Motors Group, and I think the problem going forward will primarily be around interest rates crystallizing at a higher level. They have cut down debt, but they will see some kind of larger damages on the JLR front, and JLR is like now 70% of their turnover. So it's a much bigger thing than India. We're still buying into commercial vehicles, large passenger vehicles. So M&M forms part of that. There's a lot more happening in the banking space. I think the top banks, and we're avoiding HDFC Bank right now only because of the merger complexities. Just the volatility there seems to be really weird. But ICICI and Kotak, actually, we own them. So we've increased their position sizes recently, and they've done well. I think results-wise also they seem to have done pretty well. In general, results are fantastic. Nifty's median earnings growth is now 17% of the companies that have announced. It'll go up even more once we add the Tata Motors piece into it. It's been quite remarkable that in a quarter like this, when the world we've been dealing with recessions and job losses and fears of job losses and so on, that the Nifty's had such tremendous earnings growth. So very bullish overall. Mid and small cap space, very interesting. We're waiting for more results to come. I can't take too many names right now, but not looking at it so much from a sectoral perspective, but from an individual company perspective, specifically in Indian manufacturing and high precision engineering.
Okay. Do stay on, Deepak. Need to slip into a very short break. On the other side, we'll continue our conversation. We'll also invite Rajesh Kothari of Alf Accurate Advisors. Stay tuned.
What if buildings could tell you how they could be more efficient?
I'm listening.
Well, with IBM, you can use software to help you connect and analyze data from heating and cooling to elevators to lights.
What if we use AI-driven insights to pinpoint inefficiency?
Yep, and act on it. Saving energy, money.
And emissions.
Yep, that's a big one. Now you've built something better for everyone. That's the sustainability solution IBM and a global real estate company created. What will you create? IBM, let's create.
I'm a chameleon. It's my job to change color. But your wealth manager? Well, they shouldn't be copying me, you know. You know that. Choose Nuvama. We only do what's right for you and your money. Nuvama. Let's do it right.
Welcome back. Let's take stock of some more stocks. Avenue Supermarts, known by D-Mart in terms of the stores that they operate. The stock is under pressure. In fact, on the back of weak Q4 numbers, in the last 22 months, the stock is lower by 30%. Mangalam is here with the details about their Q4 performance. Mangalam.
Well, you know, one wonders what's ailing D-Mart, because it was an investor's darling. From its issue price of 299 rupees, it had rallied all the way 18 times, as of October 2021. And even if you bought it at the listing, you would have been sitting on a 9 times gain by that time. But since then, we've seen a 30% decline in the stock price. In fact, it's underperformed both the Nifty as well as the mid-cap index among all the other stocks. There are macro reasons, which is basically COVID-led disruptions. The second one is, of course, inflation, and as a result of which there was weak consumer sentiment. And the third most important one, there was fair amount of competition as well coming in from large conglomerates like Reliance as well as Tata Group's Zudio and Max as well. But on its own part as well, the company's own store expansion was rather low. We had the company add stores at the tune of 30, 40 over the last few years every year, and the total stores stand at 324. Compare this to Reliance, which added 966 stores in the fourth quarter itself, and in fact in all of last year, Reliance has added almost 3,300 stores. Reliance's overall store area stands at 13.5 million square feet compared to D-Mart's overall retail area stands at 13.5 million square feet compared to Reliance at 65 million square feet. And even if you look at the sales per square feet, it hasn't recovered to pre-COVID levels. What could be the biggest reason for that? It's the lack of demand in discretionary segments, because as a proportion of their sales, general merchandise and discretionary is still 23%, and this number pre-pandemic used to be 28%. As a result of which, their return on capital employed too has fallen below pre-pandemic levels and not recovered to those levels as well. The only couple of things to watch out for now going forward, apart from recovery in demand, is how their D-Mart Ready, which is the e-commerce business, pans out. Secondly, valuations. Despite the correction, we've seen the stock trade at 74 times 1 year forward and 2 years forward multiple close to 59 times. If they start to add stores faster, and finally, if we see their new vertical, which is the in-store pharmaceutical stop vertical, increase, we will perhaps see D-Mart's glory days come back.
Thank you very much. Very interesting analysis there on what's ailing Avenue Supermarts. Deepak, your thoughts? Competition is clearly eating into Avenue Supermarts. Its valuation multiples have come off. It's not giving the kind of return that the street was anticipating from Avenue Supermarts, at least over the last 22 months. Thoughts and the way forward?
So, Rima, I think two things very clearly. I feel that D-Mart's valuations have been very rich. One of the reasons for that could have been, the relatively high promoter stake in the company, and a lot of people that didn't want to sell. So there was very little volume available if anybody wanted to trade the stock. But at this scale, perhaps the absolute numbers, your volume pressures have come off. The second one is also that their EBITDA margins, which have been one of the highest in the industry, have come down a little. Industry has done slightly better. So, the relative difference is much larger now. The two largest listed players, not exactly listed, but the Tata and Reliance brands have also started to make a significant dent in some part of their product portfolio. And then you've added to it a bunch of, some layer of the dark stores among the startups, which have kind of scaled up a little bit, that might have eaten a little into demand. The other problem is the real estate story also plays in here, because they like to own their stores. And with real estate prices going up as much as they have, I think paying a very high price for real estate and then building those stores out at this time is probably not optimal as well. So I think add all of this together, you probably have a period of underperformance. But I think here the valuation should be 35-40x and not the 60, 70, 80x that they are at. So you might see more of a correction here, or that the earnings have to grow to meet this valuation itself. So unfortunately, it's one of those times when you want to own this stock, but the valuations are rich enough and the numbers aren't great enough. We do have some part of it in our portfolio, but there is always this fear that this stock's overvaluation will cause more damage than the fundamentals. Great company, just a difficult price to increase valuation at.
Deepak, thank you very much. I mean, returns, of course, you borrow from the future, right? So too much in a very short time span, but then exceptional returns, and then a period of not very much returns. I've seen that many times in the past. Thanks very much, Deepak. Appreciate you joining in. Rajesh Kothari is now joining us, Managing Director at Alpha Accurate Advisors. Rajesh, good to have you with us here. Thank you very much for your time. We are practically at new highs. Bank Nifty almost got to newer highs. It's there. The Nifty is about 2% away. But I want your sense on earnings that are coming through. I think we're about 50-55% done for the fourth quarter earnings season. What have been the big surprises for you, positive surprises for you, and which have been the big negative surprises in your opinion?
Well, I think overall earnings season has been quite decent. If you ask my personal view, there are few sectors which are positively surprised. The automobile sector has done reasonably well. The consumer sector has also done reasonably well. Capital goods, one of our largest holding across our portfolios. To market, it was a surprise. We were expecting it, but I think the actual delivery has been even better than what we thought. I mean, and our expectations were much higher than the street estimates. So, of course, that was a pleasant surprise. And the good news is that the strong positive results by capital goods companies is a leading indicator of how economy we expect to do over next 12 to 24 months. So that is again a very good thing for the overall macro perspective and overall market perspective. The banking results have been reasonably good. I think that is in line. And of course, the IT sector has been a little bit disappointing. Of course, the results then started with the IT sector where the numbers were below estimates. But overall, in aggregate, net positive numbers.
Right. Hi, Rajesh. But what are you all doing then? At times you'll get that churn ratio, I think, perfectly right in terms of moving out into something and moving into something else, which is given. And you all have been fairly successful in that. Could you tell us what's the recent strategy you have done? If you could give us sector-specific, stock-specific will be even better. Somewhere where you'll have made an entry and somewhere where you'll have taken some money off the table.
Well, I think, very important thing, the only constant is change. And if you refer to the vacancy report, the average lifespan of a company, which used to be 90 plus year in 1935, has now reduced to below 18 years. And this report is 3 years old. And I'm sure by now, probably the life of the corporate has reduced further. There is not a single sector, Nigel, in India, in terms of the earnings, which reported every year 12% plus growth, not a single sector. And therefore, there is not a single sector in India where you look at every financial year, the index performance of that sector has been 10% plus, not a single sector. And therefore, the volatility in corporate earnings results into the volatility into the sectoral indices performance. And therefore, you need to be agile. And therefore, the agility, that's what we always say, quality and agility is the need of the hour. As you speak with me, we have been becoming more positive on the consumer theme. We believe that the consumer space has been hit hard on two fronts. The one, the demand was impacted because of the high inflation, particularly the rural demand, and that has impacted the volume growth across defensive as well as discretionary. And number two, even the margins got impacted because the raw material cost of most of these companies, they went up through the roof in last 12-18 months. We believe that both are going to turn from now on. The raw material cost has already started coming off. And that is resulted into, if you look at the paint companies, or if you look at the adhesive companies, or if you look at the pipe companies, or if you look at the defensive companies, or if you look at the teak and any other product you take out, correct? The raw material cost from here on is going to be less than what we have seen in last 12 months. So that's the first thing. It means improvement in underlying EBITDA margins for most consumer companies. And the second thing is the demand. And we believe that rural demand, after a very low base in FY23, is expected to bounce back. And we are, of course, hoping for a normal monsoon as per recent, what I would say, forecast by the IMD. And therefore, even there you will see a little bit better environment compared to what we have seen in last year. So this is one sector, incrementally, if you ask me, where we are turning positive. The second sector where we remain bullish from last 18 months is the capital goods sector. And here there are many companies, they have already announced their numbers. The leading companies in this sector, the two large multinational companies, they have already witnessed 20% plus order book growth. They are witnessing 20% plus order intake growth. They are witnessing improvement in execution. And very importantly, this order intake growth is across the depth of the portfolio. It is not only one sub-segment which is driving this number, it is across various sub-segments. And that means economy in general is doing reasonably well compared to what most other analysts, they think that, economy slow down and recession and all that stuff. But if you look at the order intake growth, we are definitely moving in the right direction.
Okay, consumer and capital goods. Rajesh, though, when you say consumer, at least the names that you mentioned, you mean largely home improvement, that segment, right?
No, I think it is going to be across. It is going to be both defensive as well as discretionary. Home improvement means only building material kind of a companies. Like
because you mentioned adhesives, paints, pipes and all. That's why I said home improvement.
No, I mean it across, like adhesive company, the paint companies, even the consumer FMCG companies. For example, look at the sugar prices, look at the tea prices, look at the wheat prices, look at the atta prices. They all went up through the last year. Now we are going to see some trend of softening of such commodity prices, which will result into expansion in EBITDA margins for most consumer companies across.
This was the problem was a bigger problem in Q3, was expected to sort of soften in Q4, because I was looking at these earnings expectations after Q4 numbers for even staples like Dabur, where we've seen an 8% downgrade to full year estimates. Whirlpool, durables, 11% downgrade to full year estimates. You look at Voltas, 6% downgrade to full year estimates. A liquor company like UBL, United Breweries, 13% downgrade to full year. A retail company like ABFRL, almost a 20% downgrade to full year estimates. Now, of course, there are upgrades as well. Asian Paints reported good numbers. But my point is that is largely in the home improvement space. Again, I come back to that point. Can you name anything outside of that as well? Go on.
Yeah, so I'm not talking about a durable industry. Prashant, I'm not talking about a consumer durable space. I'm talking about first FMCG space. Correct? And in FMCG space, the issue is twofold. One is the demand issue, and second is the high raw material cost issue. These were the two issues industry was facing in FY23, and that's why the downgrades what you are talking about. You think from here on what is going to happen? From here on, the raw material cost is going to be in your favor, and therefore the EBITDA margins are going to improve. Am I right? Now let's look at the demand side. Demand side, what is going to happen? The demand side, the average Indian rural India in particularly, got significantly impacted. I don't think that is going to be the case which will continue forever, am I right? It is always a seasonal. There are years when they will do very well, and there are years where from high growth it comes down to low single digit growth. I think that is also now going to revive, because please understand, the rural consumer in turn has been impacted by high inflation. When the inflation in your country is 10, 11, 12% for many basic commodities, the food items, am I right? If that reduces, your demand automatically improves. So the underlying consumer health was not very strong in last 12 months, particularly in rural India. As the inflation in India comes down, as that reduces, the demand environment will also improve. So you will have a twofold benefit: improvement in demand and also improvement in EBITDA margins. I hope that clarifies your...
that clarifies. And I think we got WPI numbers today. That was negative, right? With the so for corporates and earnings, what matters is WPI, not CPI. CPI is 50% food. Hopefully the rate of inflation slows down quite a bit. Rajesh, thank you very much. Appreciate you joining in, and good speaking with you as always. I think it's time for our segment D Street Chatter. Nimesh is with us, and he's going to give us an insight into what's happening across dealing rooms. Nimesh, take it away.
Hi, Prashant. A strong trending day for the markets. And again, we just built up on the early morning gains, but it lacks large institutional buying. That's the overall feedback. In fact, there's going to be a small market at close basket selling at a leading FIR desk. So, while we've seen 100 points, more than 100 points rally on the Nifty, it doesn't look like this is backed by very large institutional buying. That's the overall feedback. The sector of the day is clearly real estate. The index is up 5%. Stocks in that basket are up between 5 to 18%, and big move in that space. So, well, DLF was a very strong numbers, and that had a rebuff, but entire real estate basket is doing very good today. I guess the big move has also helped the broader markets to outperform. So there is a lot of pocket within the mid cap and small cap which is doing really good and chased by good flows as well. But broadly, a trending day for the markets, but lacks institutional buying. That's the overall message from the dealing rooms.
What about individual stocks? What are you picking up?
So, Rajal, in terms of individual names, the first stock is Home First. That stock was under pressure today. There is a large block, over 5% equity changing hands. And I believe one of the leading private equity investor, who's a large shareholder, is a likely seller in today's block. So, the disclosures will be very important in Home First. So, that's the first one. The second stock is Spandana Spurti. Again, this stock is consolidating in a very narrow range. The entire MFI basket reported good numbers, so was Spandana. But now I believe there's going to be a large block in this particular company very soon. So, that's something to track in Spandana Spurti. The third stock is Ujjivan Small Finance Bank. Since the earnings last week, this stock has seen a bit of momentum. And again, in today's trade, the stock is buzzing on large volumes, and there is some H&I action as well, is what I understand. And hence, that stock is buzzing in trade. And the last stock is Repro India. The stock is locked at 20% upper circuit after a large block, nearly 4% equity change hands. I believe one of the institutional holders is a likely seller. But if you look at the shareholding pattern, some marquee names are large holders, the likes of Vijay Kede owning 8%. There is Ashish Kacholia who owns 4%. So, a good amount of H&I holders in that stock, locked on upper circuit on the back of a large block. So, Repro disclosures also could be very interesting to track today.
Okay, all right. Thanks a lot for that, Nimesh. By the way, before we slip into a short break, just want to pull up the IT index. Let's pull up the IT index. A couple of these larger names like TCS, Infosys, both of them have come off a little bit from the high. So let's just see. I think that's come off a little bit. Yes, that's where the problem pocket is. That's why the Nifty as well. Maybe we could get the Nifty and we could get the IT index up, in one frame. And you'll see that the fall that we've seen on the Nifty is perfectly coinciding with the kind of fall that we've seen in some of these IT names. Obviously, you have the Adani Group stocks, Bajaj Finserv. They have come off a little bit lower. But the IT index has come off the high. And that's the reason that the Nifty as well has come off a goodish bit. Because the Nifty Bank is still performing well. That's still up 270 points or thereabouts. Slip into a short break. You come back. Midesh will be joining us. He'll tell us what's his trade on the index, as well as with some buy and sell trades.
Let's you and me step out and see how blue the sky, how tall the trees.
Skoda brings you Kushaq and Slavia, India's safest family cars.
Film shoot, iPhone 14 Pro पे. Amazing camera, huh?
And cut! Hang on, director को भेजना.
Beach से, कैसे? Those 4K videos are huge. यहाँ juice तो मिल गया. Wi-Fi कहाँ से मिलेगा?
Airtel 5G Plus तो मिलेगा.
So you've
already got it. Maybe you should get it too. Back up, guys!
Yes, it's okay for us to nod for everything. Because we are parrots. Yes. But your wealth manager? Shouldn't be doing that. You know?
Choose Nuvama. We only do what's right for you and your money. Nuvama. Let's do it right.
सीधे सीधे अरे नमस्ते सीधे 99 एकर्स पे है फ्री प्रॉपर्टी लिस्टिंग घर कल ही लिस्ट किया था और आज लाइन लग गई 99 एकर्स पे प्रॉपर्टी आएगी लेने वालों की लाइन लग जाएगी घर लेना हो या बेचना 99 एकर्स से ही पूछना
Welcome back. As we were mentioning before going to the break, the Nifty has come off a little bit from the top. So the IT index is the one that's making us struggle a wee bit. I think a couple of other names, but they're not very large weights. Asian Paints has moved a little bit lower. Adani Ports as well has taken a bit of a leg down. So some of these stocks have moved lower, but the big drag has been the IT index. Mitesh Thakkar is with us. Mitesh, well, towards the end, we're seeing some money being taken off the table. Your view on the index and the IT stocks in particular, the index itself has corrected a goodish bit in the last 30 minutes.
So I think you are right to highlight that the fall has happened in the IT index and the Nifty. The bank Nifty is still around that 45,015 mark. The Nifty IT index overall setup isn't very negative, Nigel, but what appears to me is that a few days back on the Nifty IT, we got an intraday high of around 28,348, and today I think it's 28,323. So it's a mild double top on the hourly and the 2 hourly charts. Not a very negative pattern, but yeah, I think that could invoke some profit booking, and it seems like that's happening. I would look at 28,000 to about 27,970 as the minimum target of this intraday pattern. But I think in the worst case scenario, we can even see 27,700 odd levels. So there could be about 350, 400 point kind of fall happening in the Nifty IT index, and that could keep the Nifty in the check. Having said that, on the stock side, IDFC Limited is a BTST. Buy here with the stop below 91 for targets of 94. And Canfin Homes similarly is also a BTST with the stop at about levels of 652 for targets of 667.
Thank you very much for that. In the IT pack, Zensar is doing particularly well. Reported numbers on Friday. The stock reacted positively on Friday, but it's added on nearly 14% today, and that too on very large volume. Zensar Tech for you. Big volume seen on that. Let's get to our earnings calendar then. What are the key earnings to track for the rest of the week? So tomorrow, the big names to watch will be Bharti Airtel, Bank of Baroda and JSPL. On Wednesday, 17th of May, Jubilant Foodworks and Thermax will be on our radar. 18th of May, a few companies will be reporting their quarterly numbers. They include GAIL, Bata, Indigo, ITC and State Bank of India. And on Friday, JSW Steel and Zomato will be reporting their Q4 numbers. So let's drill it down to the expectations from Bharti Airtel. Now, Bharti Airtel is basically a sum of parts, but the biggest part over there is the India wireless business. Africa is also about 30% of their overall revenues, but the Airtel Africa numbers are already known. So the key to track will be the India wireless or the India mobile business. Now, when it comes to the consolidated numbers, revenue growth is seen up 2%. Now, this will be driven by the India revenues, India mobile revenues going up by 2.8% because Airtel Africa had a softish quarter. Their revenues actually declined. Margins are seen under pressure, so consolidated margins, according to our poll, should be down close to 50 basis points to 51.5%. And this decline in the consolidated margins is despite India margins picking up and even Africa margins remaining stable. So I asked a few analysts the reason for why they're anticipating consolidated margins to come down. They said one of the reasons is that in the prior 2 quarters, the company had the benefit of no SUC charge on the recently acquired spectrum. That had boosted margins. That won't be there this time. And second, the incremental benefit on account of that. And secondly, because the company is making so many investments on 5G, capex, etc., they're not capitalizing it. They are expensing it. That's the reason why their overall, margins could be slightly subdued. But when it comes to the India business, the 2 key metrics will be ARPU, that's the pricing, average revenue per user. that's likely to go up because if you remember, Bharti Airtel over the last couple of months has been phasing out the entry-level plans of 99 rupees and they had taken a hike of 50 rupees. So straight away, the entry-level tariff had gone up to about 148, 149. So the benefit of that will result in ARPUs going up. So 196, 197 is what the street is anticipating. And subscriber number could actually be a positive surprise. All the analysts were polling or pegging a subscriber decline in Q4. But, in the month of January and February, based on the TRAI data, the company has actually added more than 2 million subscribers. So let's see whether that can positively surprise. So that's the key expectation from Bharti Airtel this time. Hemang Jani, retail equity strategist, and Motilal Oswal is with us now. Hemang, we'll chat about Bharti when the results come out. Today, wanted to get your thoughts in on Colgate. Now, the stock is up close to about 2.7%. The street is enthused with the margin performance, given the decline in the advertising promotion expense. But the volume growth for Colgate has also still been fairly middling. How would you react to Colgate's numbers?
So, Rima, I think after a long time, we've seen some improvement in the margins for Colgate, and they are back to maybe 2-3 years, prior period level. But if you look at the overall premiumization, the volume growth, there is not much to really get excited about. So we think that if you look at this quarterly result season itself, there are certain companies which have really done exceptionally well, be it Godrej Consumer, Marico, and even their outlook in terms of volume growth, margins is much better. So we feel that you should really stay focused onto those names rather than trying to get into Colgate because of the margin surprise.
Hemang, stay with us. We have to take a quick break here. There's 9 minutes to go for market closing. Things are off the highs by quite a bit, just about 80 points on the index on the Nifty, 18,394. We'll come back more on the other side.
It's time to break free. Break away from the routine to the greens and get lost in the world within. To steer through, to stop, start again, go forth and just let it all go. With JK Tyre's Ranger 80 for the ones who are wild at heart. JK Tyre, total control.
An exquisite solitaire, truly special.
Friends, I want to share some good news with all of you. Firstly, like always, we have performed very well this time also.
But what will we get?
Secondly, we shall invest in employee benefit.
Come on, now tell us what will we get?
And thirdly, we shall invest in LIC's group funded plans.
Great, we'll get everything. Now, leave encashment, gratuity, and along with pension, our future is secure.
Yes, employees' real benefit lies in LIC pension and group scheme.
Okay, welcome back. 7 minutes to go for market closing, and things are looking, up, but it could have been better. That's the way to look at it. In a way, in sports parlance, it's like, you hit a shot and the ball hits the crossbar or the post, but it does not go in. It's in football, and you can use other sports analogies to describe what happened for the Bank Nifty, because it was so close to a new high, and then it kind of dithered and didn't quite happen. And then, of course, after that, we've seen a bit of a slip off, which has happened from that point on. Hemang, do you guys have coverage on any of these names? GE Shipping, if you do, like your comments, VST Tillers, or Ami Organics? We had all three managements today on the program on the back of earnings.
So, Prashant, we don't cover some of the names that you mentioned, but I think in terms of the chemical companies, Navin Fluorine is something which has reported exceptionally good set of numbers versus estimates, and even the consensus, the beat was almost about 25%. So I think from a China revival perspective and the fact that some of the chemical prices have revived, one could surely look at some of these specialty chemical companies. Even the SRF, when you look at the chemical division, their performance was good. I think so. From a results perspective, I think these were the two areas where the performance was very good. One is SRF, one is Navin Fluorine.
Okay, all right. Hi, Hemang. What about, one thing everyone's been talking about is the cool-off in pet coke prices. Now, some of these cement companies, given that volumes will be high, pet coke prices will be low, and we know majority of the industry had moved to pet coke. Pricing is the only joke in the pack now. How do you approach this theme? And there is some buzz, and I expect in the next 6 months or so, at least a couple of smaller assets will get sold. Your take?
So clearly, I think the prices cooling off coking coal, the pet coke surely is going to be good for cement companies. At the same time, the volume growth picture in majority of the regions is looking quite upbeat. When you look at the performances, I think Ultratech was very good. Even Dalmia Bharat, the performance was good. So I think given the momentum that you're seeing in the capex story, in the real estate story, I think cement should be one pocket where one should definitely have a positive bias. Top picks being Ultratech in the large cap, Dalmia Bharat and Birla Corp, are the names that we like in the mid cap space.
Amongst the real estate companies, if you had to recommend one stock to buy at current levels, where the prospects are good, the valuations are fairly reasonable, which one would you recommend?
So, Rima, we just very recently upgraded Godrej Property, and going by the numbers, the traction in the retail sales, along with the fact that the actual churn is going to be much better now, that if there's going to be a pause in the interest rates, and if you see some kind of a stability or a little bit of a cut there, surely it's going to be extremely good for the real estate names, and most of the companies are sounding quite optimistic about their launch pipeline, about the retail sales. So I think Godrej Property is something that we think can give another maybe 20-25% kind of an upside even from current levels.
Okay, all right. Thanks very much, Hemang. Appreciate you joining in, and it's a pleasure speaking with you as always. Thanks. Here on CNBC-TV18. Well, we will end the day on the Nifty Bank at 44,062. Maybe you get decent global cues, and tomorrow there is a gap up. You'll take out the high, very, very close by the high of 44,151, which we got to, and then the market sold off. From that point on. The Nifty will end about 74 points higher. That is about 0.4%. Mid caps and small caps 0.75% in the green. So broader markets look good. 200 stocks separate advances and what was down. So that is a decent kind of market breadth picture as well. Hero, Tata Motors, ITC, Tech Mahindra, Lever and Hindalco are the top Nifty gainers, large cap gainers. The Adani stocks came under some selling pressure. Adani Enterprises, Transmission, Total Gas, etc. Cipla and BPCL were the other two kind of prominent losers that we had on the index. Rima.
Outside of the index, certain stocks based on the numbers deserve mention. Let me start with DLF. The stock hits a fresh 52-week high, very strong numbers, record booking of 8,500 crore rupees, massive debt reduction, the stock surging 7.5%. Colgate Palmolive ends with a gain of nearly 3% on the back of a margin beat, a surprise margin beat. So EBITDA margins at about 33.5%, higher than estimates of 30%. Sonata Software, a mid-cap IT company, started the day in the red, but by the end of trade, it managed to recover a fair bit from the day's low, recovering 10% from the day's low. Manappuram General Finance has clocked in a substantial beat on the bottom line, 59% jump in the profitability, so stock ends up. On the losing side, Cipla ends with a cut of about 2%. It's a large cap company. DMart, where the street is a bit disappointed. Ethos, margin correction, the stock ends lower by nearly 8.5%.
Well, Rima, let's talk about some of the big winners then. Yes, the headline index came off its high point, but Repro India, as Nimesh said, a couple of large HNIs got in. The stock up 20%, Repro India. You had Newlin Laboratories. What a dream run, right? The stock has been all over the place. But this month, by the way, it's up close to around 40%. Good numbers, good commentary. The street loves it. Zensar up close to around 13%. Shobha as well. There were those fears with regard to income tax raids that were there. I don't know whether or not it's got anything to do with the outcome of the Karnataka election. But Shobha bounced up in trade, up close to around 12%. Precision camshafts, that's another one that was up and about. Orient Pro as well was up close to around 10%. You had VST Tillers that reacted to good numbers and good commentary, and Amy Organics as well. So the headline index must have faced resistance at higher levels. But if you look at it, the breadth of the market, well, there were plenty of stocks that were up anything between 10, 15, or even 20%.
And there goes the bell. It's a wrap on Monday's closing bell. Thank you very much for watching. Don't go anywhere. Our special offering, CNBC TV18 Conversations, comes up next.
Co-powered by